morning, everyone. I'm delighted to welcome you to the LNG shipping sector panel. My name is John Cripps. I'm a partner in the ship finance team at Stephenson, Harwood in London. And at Stephenson Harwood, we have a long history of working across the LNG sector, the LNG shipping sector, whether that be on new building contracts, charter parties, claims and disputes, or in my case, on the financing side. And personally, I've been working on the financing of LNG carriers, FSRUs and other assets in the sector since the start of my career. So I'm very excited to moderate this panel, and we've got a great group of panelists to provide their insights of what is an interesting time in the sector. I'll let each of them introduce themselves. So perhaps if we go down the line and start with you, Mark.
Hi, my name is Mark Terzopoulos. I work at Maran Gas. Maran Gas is part of the Angelicousis shipping group. We are a private ship owner, a family-run business, now in the third generation and led by Maria Angelicousis. We operate in three sectors, the dry bulk, tanker, and LNG sector. On the LNG side, which is what we're here to discuss today, we have 44 vessels on the water, 1 FSRU, and 11 LNG carriers on order. We were set up in 2003 to be the LNG operating arm of the group, and we've had a steady and rapid growth, as has the whole segment. And for us, we believe that natural gas is vital to the energy transition. I think it was covered in the previous presentation very well, and as such, LNG shipping is going to be just as important. Thank you for having me.
Good morning. I'm Panos Mitrou. I'm the Global Gas Segment Director for Lloyd's Register, and I'm dealing with our strategy, portfolio of services, and the overall experience in the gas sector. So, as such, I'm dealing a lot with LNG, the LNG markets, LNG technology, and LNG carriers and their fleet development. So, I'll be happy to share my views as well.
Hi, good morning to all. My name is Eduardo Maranhao. I'm the CFO of Golar LNG. Golar has been very well known in the shipping industry for quite some time. We have undergone a number of different asset divestments over the last 18 months, and the company has changed quite a bit. Nowadays, we are very much focused on FLNG development, and I'll be very happy to talk a bit more about that today here.
Good morning. My name is John Boots. I'm with Cool Company. Cool Company is a newly established LNG carrier. It's an existing business that was spun off from Golar, but with a new group of shareholders. Golar is still in our capital structure for roughly 30%. Eastern Pacific Shipping, a well-known private shipping company, has an ownership in us for 40%, and 30% is listed on the stock exchange since February this year. So very strong shareholders, one of the youngest independent fleets in the space. Our company is obviously new. We have strong growth ambitions in the space, and we can do that very opportunistically with our shareholders. In terms of growth, we would be looking at consolidation, and that would only be if we can high grade the fleet. We focus on a balanced portfolio of shorter term and longer term contracts, and that will be the philosophy going forward. I started with the company back in April. Back to you, John.
Thanks very much, everyone. So we can fit as much in as we can. I'll jump straight in. As I say, it's a very interesting time in the sector. The combination of the tragic events in the Ukraine and the wider geopolitical landscape have led to an incredibly tight market and unprecedented rates being discussed and reported. And so I wanted to start by reflecting on some of the events that have led to the current state in the market. So Mark, if we can start with you to kick us off with your thoughts on where we are in the market and the key events that have driven us to that.
Sure. I mean, for where we are today, it's something that was repeated earlier today. It was purely because of a lack of underinvestment in the LNG shipping space. It's not just been driven by the current situation in Ukraine. I mean, they started back in 2017. There were only 20 or so orders back then. And as most of the people who were actually within the LNG shipping space saw that in their estimations, 2020, 2021 would be tight shipping. Now, as the years progressed and we got closer, this seemed to be coming true. And then COVID hit in 2020, most of the world went into lockdown. And this kind of masked the shortage there was in the energy transportation space. So what happened there was we had 175 US cargoes canceled, and that has a huge impact on the market. We had some spot ships in the market at that time. It didn't seem as the market, it should have been as poor as it was, but sentiment in the world and around energy and around decarbonization really put a negative spin on where the correct market supply balance should be. Now, as we've progressed and come out of lockdown and we see the energy demand has picked up to where we've been again, we're now dealing with that aftershock. But also 2020 ended up being a year where there was very little investment in new capacity for LNG ships, and for the reasons I just described. And now we haven't yet hit that point, and that's going to be in 23 or 24. So this situation of a tight LNG shipping market, we kind of see it's going to progress. The war in Ukraine was a tipping factor, but maybe it's even unmasking an LNG shipping market which would be even tighter than it would had it not taken place. Because as discussed before, the majority of the cargoes were expected to be going from Europe, from the US to the Far East. That's significant ton miles. Now the majority of cargoes due to the energy crisis are going to Europe. Yes, we talk about ton days now because there's a lot of cargoes we're waiting around to discharge, but it doesn't make up for the difference. So while the product market is extremely tight and rates and levels are very high, on the shipping market, I think in our view, it's actually lower than it would have been otherwise. So it's quite an interesting analogy, I think, a discrepancy between the two. So I think what we are and where we see the market going forward now, we see this shift, is that people need to focus a little bit more on the longer term because they need to make investment decisions which will cover 10, 15, 20 years.
Thank you. And I also wanted to go to you, Eduardo, on this one, to give us a perspective on the floating LNG production market and how the current state of the LNG market and gas prices has impacted the market.
No, absolutely, John, and I think I fully agree with Mark on that one. So I think we all have to remember that the LNG market was very tight even before the events in Ukraine. So if you look at the LNG prices before the end of last year, they were higher than what they are today. So I think the war and everything that happened there really accelerated something that was already coming. And what we see today, and I think that's why FLNG will play an even greater role going forward, is a very strong need to secure supplies. So energy security is really the biggest theme nowadays. Initially, when everything happened in Ukraine, we saw a big scramble from European countries to secure LNG import capacity. So you saw a number of different countries setting up FSRU terminals or import terminals. But that's pretty much what happens when you let politicians run energy policies, because in the end of the day, they forgot that it does not only require an LNG terminal, you need to secure the LNG molecules as well. So first there was a scramble to secure import capacity. Now what we're seeing is also a rush and a very strong desire to secure LNG volumes. And again, energy security will be a very important theme in that sense. So we believe that FLNG, as I said, will play a greater role in that sense. First of all, FLNGs will offer a very quick alternative to secure or to supply solid volumes to the market. It will be cheaper to develop as well. So whereas if you look at the onshore liquefaction capacity, in excess of $1,000 per ton of LNG produced, you can be producing at 50, 60% of that cost if you go for an FLNG solution. And I think another important point, which sometimes it gets a bit overlooked, is the fact that you also need to have diversification of suppliers as well. It's simply, it's not the most recommended alternative to switch from, let's call it a Russian gas, simply to an energy matrix which would be heavily reliant on the US. So I think the fact of new suppliers coming into the market, FLNGs will be a tool to allow those new suppliers to provide those new volumes into the market.
Thank you. And turning from the state of the market on the demand side, I want to start looking at the supply side. We obviously have a huge, well, very large and increasing order book for LNG carriers. Mark, you've touched on the underinvestment. So I guess what I wanted to look at next was how we see the new building vessels coming into the market impacting that, and how the limited availability of slots that we have in the market, so limiting capacity for further new buildings in the coming years, impacting owners. So I guess turning to you, John, how you see that impacting things, how you're approaching fleet expansion, and I know you touched on consolidation in your opening statement, whether you see things as a driver for consolidation in the market.
Yeah, so we've seen quite some orders in the last several years, and we've seen prices gone up from 180 to 190 to today 250, 250 plus. So I think, yes, we have a lot of ships on order, probably 40% of the global fleet. We'll talk about it in a little bit from now about steamboats, how they fit in. It looks optically very high, but I think going forward, the current prices will have a dampening effect on new orders. I think that will definitely happen. If you look at the past 15, 20 years or so, the LNG shipping has grown at a CAGR of 6%. So that means in the next 10, 11 years, especially if you listen to the story that we've heard before from the prior speaker, the 6% will happen in the near future. So that means you need a doubling of the fleet. So there is a lot of on the supply side, a lot of molecules that are coming our way, especially in 26. A lot of projects that will be completed. So you could argue about supply demand in the near term, whether that is slightly mismatched or whether there is a shortage. But longer term, I think there will be an enormous demand for LNG ships. The other main reason that I don't think we'll see, at least based on our information, with the rates that are currently being quoted for 15, 20-year contracts, because you don't want to order a $250 million vessel without, ideally without a major contract. The current rates are not really supportive of 250, 260 in new builds. So I think there will be a bit of a slowdown. Plus, as you mentioned, capacity is within the shipyards is somewhat limited.
Thank you. And I know, having had the discussions we've had, Panos, eventually your view on how you see the supply-demand balance going forward, and how you see that order book impacting the fleet and the requirement for new LNG carriers. I'm guessing the answer will be also on the scrapping side that we don't foresee that, and that the rates and the demand will push out the age of older ships. But also, I guess, any predictions you have on that side of things as to how the global fleet will develop.
Yeah. So the LNG carrier segment is a far more challenging segment. I will focus on the supply side, the shipyard supply side. So it's quite challenging building an LNG carrier. So we only had 4 yards across the world dealing with this a few months ago. But what we see as a shock, a demand shock, pushed more players in the market to try to develop the know-how and the ability to build LNG carriers. What we see is that the CPR capacity side had no feeling of what could be a shock in liquefaction. And this is what we're going through. And by 25, 26, liquefaction plants planned to be delivered and commissioned today will not be able to be catered by the shipbuilding capacity that we have for LNG carriers. So we see the numbers, and it was not only ourselves, there were other players in the market who saw, like GTT for example, who saw that there was a substantial lack of ships in order to cater for the additional liquefaction capacity that was planned. Today, we cannot even meet the requirements for new ships based on growth projected. We will soon need to deal with the renewal aspect of existing ships. And as mentioned earlier, there is an issue about regulation that I think we're going to have the chance to discuss further. But it's true, there are 400 ships or more belonging to different technology generations, not the latest one with two-stroke engines. But I would say that even for two-stroke latest generation ships, we are going to see problems in the future. That's a very warning sign from our side. The truth is, under the pressure of the market, we are doing repeat designs, as a partner of us mentioned. We are doing repeat designs for years. We don't have the ability to push the yards and the technology providers for more progressed designs. And the fact is that based on the lead time we have today, we will be building, most probably we will be delivering the same spec that we discussed in 2018, but we're talking about deliveries in 2026, 2027. So for 10 years, the ships have practically been the same, with the only exception of an improvement on the engine design, which is, I'm afraid, not an improvement, because there's a different technology out there which was already doing better, especially on the methane emission side. So we see that obviously there is a demand shock, there is a super cycle there. It's not the usual cyclical thing. The LNG sector, I'm talking about not just about gas, but LNG in particular, due to the geopolitics and what has happened, is growing and growing fast. We are going to see quite a number of additions in terms of liquefaction during this decade. Shipbuilding capacity was never ready to deal with a shock like this, so we're going to have supply-demand issues. The key alarming sign from our side is that under this pressure, we're building practically the same technology, and we use the same technology for ships for years now, a decade. And this is going to lead to problems, most probably soon after the delivery of these ships. So this is something that worries us a lot.
And we'll come on to that point in the decarbonisation. I guess in terms of the sort of fleet development and new projects, Eduardo, I also just wanted to turn to you. I mean, see the size and the nature of the fleet on the floating LNG production side is different, but the drivers are the same, and we're seeing a lot of new projects under development. So I'd be interested to hear from you, and I think you've touched on it already, but how you see this this market developing, and whether you see the sort of the barriers to entry and the high capital costs, meaning it's an area that will remain dominated by limited number of players, or whether you see that changing.
Sure. So first of all, we don't believe that the FLNG market will be a market dominated by very few players. So I think we see that there will be other players coming into this sector in the future. You have definitely a very strong barrier to new entries, which is the fact that one FLNG unit is a multi-billion-dollar investment. And also the fact that due to the nature of the operations, it's very challenging. It's not impossible, but it's very challenging for you to go 100% on spec on a new build unit or even on a conversion unit. So you have to suit the vessel, you have to suit the unit according to the gas specifications of a particular field or a particular project. So I think that in a way, it really restricts the number of new players. I think one issue that we're seeing nowadays is yard constraint. So especially when you're dealing for new builds, which are units that will take longer to be built, yard constraint is definitely an issue nowadays. So I think we have a dual approach to that challenge, which is the fact that we can either do conversions of an existing carriers into FLNGs, or we can opt for new builds. So I think the conversion path is something that offers a very quick route for new FLNG capacity to be brought to market. And when you look, for example, into our own fleet, the 2 units that we have built, the first one in operation and the second one, which is almost ready, they were conversions of existing carriers. And we also have another vessel which is suited for a conversion. But we have different kind of designs which we can adapt according to a particular field need. So I think in the end of the day, yard capacity is a constraint, but you have ways to address it.
Thank you. And just to sort of jump back, I guess, to Panos, to the point you were mentioning, the next topic I wanted to address was decarbonisation. It's something that we've heard about throughout the morning, and we continue to hear about it at these kind of events over the years. It remains a huge topic. Panos, you've mentioned some of the issues on the LNG side in terms of the new vessels and how the vessel designs have remained constant. I guess the question then for you is how you see the market addressing the decarbonisation issue, and how you see the methane emission issue being addressed, and whether, I think when we spoke earlier, you talked about the wider solutions in the shipping market in terms of carbon recycling as well, as whether you see those as being the solutions.
Yeah, thank you, John. So I think that based on the figures we see, one way out could be to increase shipbuilding capacity. As I said, LNG carrier shipbuilding is a very challenging story, so we see more and more yards getting into this business, but the numbers we are looking for cannot be tackled by the addition of yards now trying to develop this capability. We are missing a substantial number of ships. So on the other hand, we have the CII and other regulations coming, and it's not just the CII by all means, it's the ETS, the Fuel EU, and what's going to follow at an IMO level. So we have, from now on, we will only be having more regulation, not less. So the idea is that the current fleet, especially the first and second generation, technology generations of ships, will have problems and issues to face. Based on the supply-demand, very challenging balance that we see today, it's impossible, based on societal needs, to get rid of those ships. So shipbuilding capacity is almost saturated. We cannot expect more from that side. Withdrawing from our climate compliance commitments, it's most probably also out of the question. The only way out is technology development. This is where we focus. And I heard earlier the comment about retrofits and the fact that, yeah, it's very challenging to retrofit a ship that has not been built for a purpose. But the truth is, we don't have any other option. I think the LNG sector shows the way, what's going to happen. We will simply realize that when we will finally decide to order ships, there will be no slots available, or slots will vanish too quickly. So the only way out that we see is to focus on the current fleet and try to save and prolong the life of those ships by investing in their compliance. And to make that happen, we need more technology, we need the right technology, and we need to focus and invest on the development of the technology. And for LNG carriers in particular, we have, for example, solutions like reliquefaction or air lubrication, but on a more, let's say, ambitious intervention, I would mention methane abatement. What can we do to make those vessels methane-proof vessels, which is going to be a very challenging bet, but a very, I would say, a life or death issue for the ships. And the second issue, of course, is CCS, carbon capture on board. This is also a great hope, a great prospect for extending the life of the ships and the use of the ships, and perhaps becoming more flexible on how we invest on ships, so that this uncertainty risk that keeps us away from taking a step for decarbonization today will be out of the way.
Thank you. And I guess with the backdrop of the challenges we have and that need for technology, you know, I guess, Mark, I just want to turn to you to get the perspective from an operator. Do you agree with Panos' views? Are there particular things you're looking at in the decarbonisation space for your vessels?
Yeah, sure. I think from our point of view is the way we see the market right now. I mean, I think everybody agrees that if we use more natural gas versus coal, that's much better for the environment. Right now, we have CII coming in on 1/1/23, and what's it going to do? It's going to reduce the capacity of shipping LNG carriers. Yes, it's going to have a small benefit on those ships by decreasing their carbon footprint, but we're missing the bigger picture when it comes to that. And in our view, it seems that all of shipping has been lumped together in one basket, and we need to look at each segment separately and address the needs that are there. As Panos mentioned, the steam fleet is about a third of the existing global fleet right now in the LNG carrier space. Even if you add in all the new buildings which are on order, you're then probably down to 20-25%. That's a huge number. And if you're talking about replacing those ships with new ships, again, that has a big carbon footprint. So the question is, what can we do to, as Panos said, to prolong the life of the existing fleet? And also, this will have a big impact on the market players, because it's going to allow charters, it's going to allow owners to make investment decisions based on the full life of the product that they're talking about. I mean, right now, the biggest problem that we see everybody having in the market is, okay, we can look at the next 5 years, maybe 10, but after that, what happens? From an LNG owner's perspective, that means you've got a ship which is, its life is 20 or 25 years. That's a big question mark. And so the more security people can have around being able to make decisions today without thinking, okay, well, actually regulations are going to change in 3 years again, so who knows, is the ship I'm ordering today going to already be dated 3 years after delivery? That's a lot of money to be throwing down the drain. So it makes investment decisions very difficult. I think from our point of view, all that we've managed to do is work with the different companies within the industry to try and find ways to reduce our emissions. On all of our new buildings, we went after ships which had the lowest emissions when it came to carbon and methane. We installed shaft generators, we installed ALS, and this helps. We haven't seen anybody really willing to pay the differential that it cost us to do it, But that's an investment that we're making just to be more protected on the back end of when the ships need the second part of their life. So,
thank you. And a huge challenge. The next topic I wanted to move on to, given that we're Capital Link and we have two CFOs on our panels, is access to capital within the sector. LNG shipping has remained popular with banks and in the wider capital markets. Stephenson and Harwood have been involved on things like private placements. We've seen the growth of leasing in the LNG sector, and more recently interest in JOLCOs and other French tax leasing. We've also seen outside investment in the sector. So I guess I'd be interested to hear from you, first of all, John, how you see access to capital changing given the current environment within the LNG market and the wider macroeconomic environment, and if you do see it changing, and how you see that impacting on your business.
Yeah, I think traditionally the shipping business has been financed by what you're saying, by the bank financing, by JOLCOs, by sale-leasebacks. Sale-leasebacks have been very popular for a while. I don't see that necessarily changing near term. I think that will, given the state of the LNG market, I think that will continue to be strong. Banks as well, and I see it, as we speak, because we're working on something. The real negative that we have seen in the past, 6 to 9 months is that the floating rate has significantly increased. Most of these bank deals are done on floating rates. So if you fix that, you go back to a more historical margin. If you add the margin to the fixed SOFR of, call it 6%, or more than 1% plus or minus. So that leads you to believe that at some point we will need to start looking at the bond market as well. For instance, in Oslo, I don't think it's competitive yet, but I mean, when we did the deal in February, we had a SOFR of 50, 60 basis points plus a margin of 275. That's hard to compete with in any financing market. But today, fully swapped, you're talking about 6%. So I think it will actually, it's a negative on the one hand, but it does open up opportunities for other financing vehicles, albeit at a high price.
Yeah, absolutely.
Net.
And Eduardo, as our CFO, I'd be interested to hear whether you see that differing on the floating LNG production side, how you see the financing structures changing as well for new projects coming online.
Sure. So when it comes to FLNGs, I think there are some key considerations to be made here. So first of all, we see a strong appetite from Asian banks and Asian lenders to fund those projects. I mean, the fact that most of the yards are in Asia is also definitely something that helps. But one key difference from when we look at FLNGs to simply looking at a pure shipping fleet or LNG carrier fleet is the fact that most of the lenders, they look at FLNG as project finance. So the need of having a firm offtake agreement on some sort of a visibility on the long-term offtake of such a project is something that really differentiates the European lenders to the Asian lenders. So I think we have seen currently in the market that the Asians, they have a strong appetite or a stronger appetite to fund those projects on an asset basis. So looking on a loan-to-value approach as opposed to simply looking at what is the profile or how does the offtake agreement looks like over the life of the contract. I think it's something that really gives us a much more flexibility to deal with those lenders as opposed to dealing with the traditional shipping banks. So when it comes to FLNG, this is something that gives us, as I said, a very strong hand when it comes to the commercial side of the project. So it allows us a greater degree of flexibility and also the ability to wait up until we actually progress much more into the construction phase of the project, and as we approach commercial operations to really secure a long-term offtake agreement. So I think these are the facts that really differentiates to pure LNG shipping fleet to an FLNG kind of a financing.
Thank you, and I'm slightly conscious that we're running out of time, but I also wanted just to sort of turn to the medium and longer term outlook and how we see the sort of current developments impacting the market more generally in terms of how rates are impacting chartering strategy, how you view the current rates moving, and how you see trading patterns changing as there's increased demand for seaborne LNG in Europe. So perhaps, Mark, maybe we could just start with you, with your sort of perhaps even just sort of crystal ball gazing for the future in terms of how you see the market developing, how you see rates moving, and what perhaps you see as the sort of challenges aside from the supply-demand balance and decarbonisation that we've talked about.
Well, I left my crystal ball in Athens. But I think, one thing that we've seen in the LNG market, this is a second consecutive winter that is happening. Right now, you have no more independent owners who are trading vessels in the market. The independent owner acts as kind of a counterbalance to the project player, the energy major. They're on the different sides of the equation. One's long, the other's short. Now, right now, we're in a market where we see, and rates are reported, some are even ours, even though they're not under our control. And this happens. I mean, this is a function of the way the market has developed. And now you have different players who all have the same position. So they're all short at the same time, or they're all long at the same time. And this is what we've seen in the last few cycles, an extreme amount of volatility. And every time that happens, it goes through the roof. And right now, if the steam rates are at $200,000 per day, TFDs, $350,000, $400,000 a day, that's still not as high as it can go. And that can be quite a scary thought of when you're talking about availability of supply. I mean, LNG carriers are the pipeline to move natural gas across the world. Now, we need to make sure that there are vessels to do that, and we need to make sure there are vessels to do that in a safe manner and not trying to just get through this day by day and figure out what's going to happen tomorrow. It's a long-term game. It needs patience. It needs partners who can work together, figure out the best way forward. And we do see that, and we do see that with our customers and with our suppliers as well, that there is a desire to move forward and to move forward in the most efficient manner. I think the concern that we have is that we don't want to just be forced to move somewhere, to pivot in a direction which doesn't actually have a real benefit.
Thank you. I'm conscious of the time, but I was going to turn to you, John, as well, just to see if you had anything you wanted to add.
Yeah, it's what you say, Mark. The rates are what they are, right? That's just the factor of balance of a supply and balance in the market. But for instance, what you see with China, a perfect example is that in 2021, China was a big off-taker of U.S. gas and didn't need it all and benefited from arbitration prices and shipped it to Europe, right? 2 days ago, they basically said to the three major oil and gas companies, no more subletting to Europe, right? So it's very short-term thinking but not only by oil companies or trading companies, but also by governments, right? So that's really scary, as Mark was saying. So what we currently see in the short term, in the market is, with the Ukraine war, you saw actually the ton mileage coming down, shorter distances, and it's kind of reversing in a way that you have more idle time right now. In September, I think there were 33 LNG carriers used as storage, so they weren't really moving. You have inefficiencies with offloading the LNG at the import terminals, so there's a lot of moving parts effectively. So and within Coolco, we for the wrong reasons, because of the war, of course, but we have some open ships. So we soon. So hopefully we can help our clients to move some of the loads. But it certainly is a very volatile and uncertain times. Long term, I think it's Europe will never want to be dependent on Russia the way they were. I mean, that is, to me, that's not going to happen. So it will be a lot lower reliance on Russia, for sure. I mean, it's too much political risk. So.
Absolutely, and I'm just looking at the clock. I think we're out of time. I'm just to see whether we have time for questions or whether we should wrap it up and let people come and find our panelists in afterwards.
I think maybe we should have brought the panelists.
Yeah, well,
We have to keep the time.
of course. Well, apologies for overrunning, and I'd like to start by thanking you all, Mark, Eduardo, John, and Panos, and thank you all for listening. Thank you very much.
Thank you.